Bruce, welcome and thank you very much for joining us today. I'm excited to share and learn more about how you've been investing over the last few years. And maybe just to start it off, why don't we jump into, maybe you can give us a quick little brief background on yourself, and then we'll jump into a few questions.
Great, thanks so much. So for the last 4 years, I've been an active investor, an active angel investor, early stage investor, and I also invest in the markets. I've always had an entrepreneurial drive. But that said, I had 37 years background in the corporate world. I was a corporate dude for 37 years. But inside my corporate life, I managed like $3.5 billion of capital inside the company, and I invested in projects in the company. So I was in Bell Canada. So telecommunications, so we have to build out some infrastructure. We're going to lay out some fiber optics. We're going to roll out a new product or a new service or a new offering. We've got to build a call center. I looked at freaking thousands and thousands of business cases over my life, right? But they were all internal, like how is this gonna, what kind of a return are we gonna get on this investment? What's the NPV look like? What's the, how many what head count is it going to reduce? What kind of productivity is it going to drive? What kind of customers are we going to attract? So I always did that inside with, inside a company, using the company's money, which was a little bit easier. On the side, I invested in the public markets, it was toward the end, I was getting ready to leave. I wanted to do something different. I wanted to be free, and I wanted to kind of get it, because my wife works in the entrepreneurial world. All of her clients are successful business owners, and that attracts me a lot more than the corporate world. So I left, and I had already established a little bit of a bridge with the angels and had started already investing in some startups. So it was a real easy transition for me. And it's one that I feel very grateful for having had the opportunity. I like being freer, and I like the startup world and the energy and the opportunity there. So that's a little background.
No, that's great. And I when I was reading up on you, and I've learned a lot about you over the last few years through Spark Angels, and I was reading up, and there was a lot of great compliments to yourself about exactly all those things that you just stated around how you were able to build very energetic teams to build out products and help support Bell Canada's initiative. So that's awesome. So the first kind of question is, what you talked a little bit about it, but what got you invested in startups? What's made you look at, instead of helping maybe just purely from a help standpoint, as you moved out of Bell, what got you investing into early stage companies?
Yeah, so I've always been an investor, and the public markets are interesting, but you're a million miles away from it, and it's more exciting, I find, when you invest in an early stage startup company. It's a lot more personal. You're closer to it. You can look at into the eyes of the CEO or the founder. You can get an idea. You can kind of read their energy. You get a sense of what it is they're trying to do and where they want to go. And so there's much more direct relationship in terms of being able to help them. And there's also, if you're fortunate and everybody wins, there's an opportunity for some fantastic wins and returns. And so I think entrepreneurs are the engine of the economy. You hear everybody say that, right? That's what we need. We need small business. We need entrepreneurs to keep things going. Anything I can do to help them realize their dream, for me, it's just kind of like when I managed my teams in the past. Like, I wanted to see them win. I didn't care about, I just want to see them win. Anything and everything I can do to see, get a smile on their face and for them to get a win, it makes me feel good. And I get that same buzz, really, from the startups and the founders that I meet. So connect, collaborate, create. Those are the three things I like to do. And if I can do that in a way that helps people move their dream ahead, then I'm all in.
No, that's awesome. I totally commit to that same philosophy. When you have 90% of the world made up of early stage startups, they're supporting so much of the economy that we got to do a lot to kind of help support that. And it's people that work their way through the system, that start to learn and say, how can I really give back and how can I get in there and support it? And your household obviously accommodates that, which is amazing. So when you're kind of going through this and you're figuring out you want to start to work and invest in startups, what was the trigger point that got you invested in this? Was it you met someone that was already investing in the startup world? Was it you got approached by someone? Like, what was the trigger outside? I guess your wife obviously played a big part in this in her role, but was there a trigger that said, you know what, I got to get into this full on, this is really going to be impactful?
Yeah, so it kind of happened by accident. Sometimes what you're looking for sometimes shows up. And it just happened to be a brunch. I was out, Shannon and I were out for brunch with Gary Einenham and his wife. And his wife was an old family friend. I grew up with her, and we were at, and I just saw, so I hadn't seen them for a long time. So I was just asking Gary, what do you do? And he said, and he mentioned that, well, I'm part of this angel group, and he was telling me a little bit about it. And I was inspired by it. And so he invited me out to a meeting. So I went out to Ajax, which is like in the middle of nowhere for me. But I went out there and I went to the Spark Angel meeting, and I met some cool guys, and I thought, this is great. This is awesome. I want to be a part of this. So I've rarely missed a meeting since then, right? I signed up right away, and I became part of the group. I love the guys that are in that group. You can see everybody is there for the right reason. They all want to help. They all want to contribute. They all want to help. They have such a diverse set of backgrounds and skills. So everybody brings something to the conversation. And so I got to thank Gary for it. And, Gary's helped me make a lot of money.
Well, Gary's a good man. I'm a big fan of Gary too. So that's a great way to get brought into the field. And I found that in interviewing a lot of early stage investors, a lot of them have a very similar story, that they kind of just fell into it. Life was changing. They were going there, and all of a sudden, boom, this was in front of them. They jumped right into it, and they went full into. That's amazing. So a great way to start. So what kind of comes back to is, what's your favorite part of investing? There's obviously the money. There's all these things that kind of go around, but what's the piece that really interests you the most?
My favorite part is I love the story. My favorite part of investing, I love the stories. I try to understand why somebody thinks this is a good idea. Like, what is it that you're doing? What are you trying to achieve? What's the problem you're trying to solve? Why? And I like sort of like trying to get inside their head, the founder's head, and understand what it is that's driving them, and why do they think this is going to be successful and make a difference. And sometimes I don't get it, right? And sometimes it's like, man, this guy's onto something, and I want to help. Anything I can do, anything and everything I can do to help this guy succeed and reach his goal, I'm all in. So I have to really get that kind of connection for me to engage. But I love the stories. They always have, over time, they always have twists and turns and ups and downs. It's never a straight line. It's not like you give them, a couple $100K, they go and build some software, and then they've got customers and everybody's happy. There's always twists and turns and ebbs and flows. Every now and again, they got to reset, they have to pivot. So I love seeing the entrepreneurs and ride that journey with them. And of course, the favorite part, I guess, is the reason the angels are why we're there in the first place, really, is that I love an exit, right? An exit is a beautiful thing. And, I've been fortunate to experience a few, and they more often than not are surprises. When you're least expecting it, something happens out of the blue. And, but it's cool.
Yeah, that always is an exciting part. It's like a little early birthday gift or something, if you will. But I do like the fact that you created around the story, and the story is what creates the drive. And when you have that, and you can really understand where they're coming from and jump inside of that story and work with them, I think that always creates a great potential outcome, especially when you get a lot of people with different insights into how that story can shift. And like you said, at Spark, you've got a lot of different ideas and people that come from different domains, and having them jump into that same idea and that same story can really help it bolster it and make it a lot bigger and successful.
Can I tell you about one that was probably one of my very first meetings, JP?
Yep.
So I'm looking around the table, and there's probably about 30 middle-aged dudes like myself, and this young guy comes in to pitch. And I'm flipping through the material, and it was about gaming, right? So it was Menashe.
Yep.
So I'm flipping through this, and this guy's like video gaming. And I'm looking at the table, and I said, holy smokes, this guy's in the wrong room, right? It's all a bunch of middle-aged geezers here. I bet you nobody in this room, as myself included, has ever played a video game. And he started talking about his dream, his vision, his company, and what and his passion, and what he loves, and what he wants to do, and what he sees as an opportunity, and where he sees the future of video gaming going. And then he started talking about numbers. I started making notes. He starts talking about numbers, like the number of people that play online video games and all the stuff. And it started to become flabbergasting. And it was still, I think, to this day, it's the only time at the end of his pitch when Malcolm asked, is anybody in the room interested in learning more? Every single person put their hand up. First of all, you could see this is a guy who knows what he's talking about. He's absolutely passionate about what he's doing. The size of the market and opportunity is mind-blowing, even though before that day, I didn't know anything about it. And all of a sudden, it's like, this thing is staggering. I couldn't stop myself from learning more and more and more about that industry and what was happening. And so that was one of my very first investments, which ended up being a bit of a treat.
Yep, they went IPO, or
yeah.
Eventually went
RTO.
Yep.
RTO, merger, IPO, and onward and upward. So that's one that it's just a great story. So it pulls you in, it compels you, and you start to follow it, and you learn a lot about it. And then you find ways of contributing and helping sometimes. Sometimes you're just a passive observer and you cheer them on. There's different roles for angels depending on the business and the opportunity in your background.
Agreed, and that's a great story. For Enthusiast Gaming, I came in a bit later, but the same thing. Big fan, jumped right in, and very exciting. But I wish I was there for that first story, because I think that would have been very compelling to watch and to see. But that was great for sharing that. Thank you. So now you've kind of gone through this cycle. You're seeing pitches. You're learning more about why you're inside of this or getting through it. Is there a set number or a schedule, or how you look at how many companies do you want to invest in a year? Do you have that tallied out? And from all the interviews, everybody kind of has this real strategic way of how they were looking at the year and say, okay, I'm going to do 5, or I'm going to do it this way. Do you have a philosophy or anything that you stick to when you're investing in companies?
Yeah. So I try not to jump on every shiny object, because I've got this nature that would be easy for me to do that. I have to I've over time developed a filter that I use to determine which companies I want to invest in and which ones I'm not interested in investing in. I probably jump on like 3 to 4 new companies every year. And I know that you will ask later on about, follow-ons and things like that. Because what happens is once you start building up a portfolio, a couple of things happen. The companies that you've already invested in, have come up with a second round or a third round or something. And, I'll talk more about that later. So I try to like 3, maybe 4 new companies a year, but you get to a couple of things happen. One is you start to get too many, so you can't pay attention to them. And I think it's important to stay on top of, they can't be 100% passive. You got to pay attention and follow up and see how they're doing. So I probably have about 12 or 14 right now. Some have already exited and moved on, and some new ones have come in. I've got about 12 or 14 companies. So 2 things happen. One is you don't want to get too many. You don't want to jump on every shiny object. You need to be selective. eventually, also, these are illiquid investments. So you only have so much money. You have to decide how much money you want to throw into this asset class, right? Like how much of all my, my cash, how much of it do I want to have, that's illiquid? There's no market for it. You got to wait. You have to be patient. You got to wait for something to happen that may or may not happen somewhere down the road. So and then I spread it around to different types of investments, right? So like I've got some of them are angel investments, things that I saw at the Spark Angel or York Angel or G10 and all those different groups that have brought opportunities forward to us. I had through the network there, I've met a lot of people and I've joined other groups and I've participated in larger, more venture capital sort of stage stuff. So like with the Bright Spark group,
Yep.
I've done a couple of deals with Mark and the guys at Bright Sparks. Through people that I've met, I got connected into this group that we get in early on unicorns. InvestX is a big firm out in Vancouver, and they get pieces. They get to buy insider shares of large companies. Like the best one that I got there was Spotify Music. So first of all, I love the company. I love the product. I had an opportunity to invest in it before they went public, and I did it. And but it's a later stage. You get in at a later stage. So when they go public, then I got like 2.5 times a return instead of some of these smaller companies, and they go public and you get 10 or 12 times return. So there's all kinds of different things. When you get in at a later stage, there's less risk, but there's less return. You get in at the front end, there could be massive return. There's a lot of risk because there's a fantastic amount of unknown and uncertainty. But
you're diversifying well, right? So I think what you've kind of laid out there is that this is an asset class and you can't just dive everything into it. You've got to be sparing to figure out what goes in here. Where can I get some mid-tier stocks? Can I buy into another company that might be, as you mentioned, unicorn? There might be some other things that you might get into that are outside of the whole stock markets and early stage companies, but you really do have to diversify. And I think that balances out your portfolio, and being able to manage that, I guess that number and that amount of dollars will then lead into the fact that you're able to make sure that you can reinvest. So is there a percentage of reinvestments that you look at doing as well?
Yeah. So every time, you get new money comes in, sometimes you get an exit, you get money from that, and then you got a stash, right, that you get to redeploy back into the space. And it starts, you start to get a nice little cycle going. And it takes a while, obviously, for that to build up and for it to happen. But I remember talking to a guy early on, and he said that the problem is why some of these angel groups need to keep on recruiting new angels is because existing angels run out of money, right? You've invested in 10 companies, nothing's happened, you haven't had an exit. And then you start worrying, like, am I doing the right thing? Or do I just need to be more patient? Right? And then, but then as soon as you get one pops and some money is freed up, then you've got the cash and the stash ready to go and look for your next opportunity.
And that's great that you're looking at the future of that, because a lot of the times I see with investors is that they're kind of a one time onto the next, and they kind of forget that it also looks good when you reinvest in a company. It also de-risks it for the rest of the investors that are coming in at that next level. So if you came in at an early stage and now it's at a pre-seed and now it's at a seed, if you decide not to go back in, there's other investors looking at that and they're asking, hey, are the other investors coming back in? Well, why are they not coming in? And it actually does help de-risk a lot of it when they see that investor has gone through at least 1 or 2 stages. It makes a big difference in helping that company secure that next round. And really, at the end of the day, that helps your companies from failing. So
yeah,
because a lot of the times they're not at the stage where they can get through without that extra liquidity.
Something that you mentioned there, JP, I think is really important, is that there's a fair bit of collaboration between the angels, especially the good group of guys that I was fortunate to meet up with at Spark. So there will be often a company that maybe 4 or 5 of us all went in on in the early stage, and then they're coming up with a second raise. And so we have conversations. What do you think? Are you going in? What do you guys What are you doing? And so we talk about it. Why do you think this is a good time now? And when companies are, you know, there's different reasons that companies have a second round, right? There's good reasons and bad reasons. Sometimes they're running out of cash, you know, and they just need more money for sort of to complete what they started. Sometimes it's a beautiful thing because they need money, because they've already developed their product or service or software or whatever they developed, and now they need money to meet because they need to meet customer demand. And when you see something like that, when that kicks in, I'll give them as much money as I can, because you're actually now, you're not funding the development of the company, you're actually funding the growth of the company, and you start getting closer and closer to a reward. And you know, each time you go in, the valuation of the company has changed. So you know, the return you're going to get on those later stage investments is a little bit less, but I would say the risk is also considerably less. So it balances out nicely.
And for sure, and you're also getting, like you mentioned, the group thing. You're actually bringing a lot of these investors together to help prop it up. And the more investors you can bring into an opportunity, the more interest they're going to have at the next opportunity, and it really does benefit that early stage company to know that they've got 4 or 5 or 10 people that are really interested in what they're doing to support them.
Exactly.
So you've kind of structured your investments, where you're going to go on the DD side. Going into the deep dive, are there certain criteria that you look for that you really like to make sure that you have in order to make this investment? And I look at this from, there's 2 sides to it. There is more on the paperwork side, and then there's, of course, on the team or other areas that you might think outside of your standard DD materials that you look for.
So, well, I guess the DD is the most important thing, right? Because, you know, that's where the commitment, that's where the rubber hits the road, right? It's you're in or you're out. But once you're in, you can't be half in, you're all in, right? They got your check. They cashed your check.
Yep.
So the DD is like, obviously it starts with the founder, starts with the entrepreneur. And I have to like the person, right? I have to believe in the individual. It's nice to hear a little background in terms of what they've come from and what they've done in the past. But I have to believe that they've got what it takes to turn their idea into a success story. And so you look for, like, you know, they really know what they're talking about. They're knowledgeable in the space. They've got passion. They've got drive. They've got tenacity. They are. You have to find an entrepreneur who's strong and clear in terms of what they're trying to do, but also somebody who you believe is going to be coachable, who's prepared to learn along the way and pivot and make accommodations and adjustments if they're required. You need people absent ego. If the CEO looks like they've got some kind of an ego and they think that they know everything and they got it all figured out, and just give them the money and it's a guarantee, like I'll run as fast as I can. A zero ego, somebody who's prepared to build a team with people, surround themselves with people that are stronger and smarter than they are. That's how you build great teams, right? And give somebody who's going to give the other people, the team members, the credit. So I have to believe in the CEO 100%. And then the idea has to be scalable. I have to believe that this thing can catch on like a wildfire one day, like a good old Australian wildfire. And I see so many pitches that a lot of them are good ideas. Like, usually they don't make it that far with a bad idea that they kind of in front of the room and they're telling you about their idea. But a lot of them I find are maybe they're too niche-y. A niche isn't necessarily a bad thing, because there's some large niches, but some of them are maybe a little bit too niche-y. Some of them I think are could be a good business, but not a good investment. Like, I don't want to invest in something that's going to provide a guy a good job and income for the rest of his life. You know what I mean? Create a nice little business, and you're going to make a couple $1,000,000. He's going to make a couple $1,000,000 a year, and it'll roll on. But the thing you have to look like, how is it? Is this company? Is this idea? Is it saleable? Like most of these, I would say the majority of the exits that we're going to see from these companies is that somebody buys them out. I don't think very many of these early stage startups actually make it to the IPO stage. If they do, it's super cool. But you have to invest in a company that I have looking at a company that I think can, once it's established, it can scale fast. And it has to scale, and that's really what I look for. I have to believe in the CEO. I have to believe in the idea. I have to believe that it's going to scale. I have to believe that there's going to be an exit.
No, those are four great pieces, and I agree 100% that when you start to look at the idea, it shapes around the CEO. Can they see a vision of growing this really big and scaling quickly? Do they have the right people? Can they get the right people? And are they too niche and it's not going to allow them to move? So those are great things to look at when you're going through DD and diving in. And sometimes when you're in the DD, you're in with these larger groups, and there's a lot of ideas, a lot of comments, a lot of questions bouncing around. And it's interesting, as you mentioned, by putting ego aside, how fast you can find how they can adapt to all the questions and how they're maneuvering in and out of all the data that's required for them to move forward. So it really does give you a good idea on the tenacity, the passion, the drive, and how hard they're going to want to build the company, because they don't want to give up because they hit a little bit of a hurdle. So I think some of those things come out during DD and along the way. So it's some great four things to look for. 100%. I love that. Inside the investment portal, now you've kind of gone through this journey. Do you look at leading rounds, or do you tend to work with the groups that you mentioned and kind of all lead together? How do you look at that scenario?
Yeah, so looking at leading rounds, JP, I really know myself well, and I hate administration. It's not my thing, right? It never has been. I know my strengths, and I know my weaknesses. And when it comes to leading around is administration. You have to be committed to doing it. It's chasing people down, making sure that they read all of the documents, that you get you send out the DocuSign packages, and getting everybody's NDAs back, and getting the checks in, and reminding and nudging and following up. So it requires a lot. Like if you say that you're going to lead the round, then the entrepreneur, the entrepreneurs put a lot of faith in you, and you have to deliver. And it's just not my thing. I'm not good at that kind of stuff, and I'm an idea guy, and I'm not a paperwork guy, an administrative guy. So I would say, so in terms of leading around, I've never done it. I've helped a little bit, right? Chase people. I've helped a little bit. Yep. But I would say, because when I was reading your question, I said, never say never. I've learned that. That's a lesson that I've had to learn over and over and over again with myself, right? But I say never, because there could be a time when I see a company that I just feel so strongly about that I would do anything to help them get off the ground. And so I would even maybe break my own rule there, but it hasn't happened yet.
Well, I'm sure there's a company out there that's going to hear this, and they're going to come after you and find out how they can get you to lead. So I'm sure you'd be a fantastic job at rounding people up, especially like you said, you haven't done it. So that puts a real big flavor to someone wanting to get you in there, because you'll do a great job. Is there any preferred terms that you look for in an investment?
So I don't So obviously you want a good favorable terms. It needs to be a balance between it has to work for the entrepreneur and it has to work for the investor. And so I have invested, and I don't know if I have a real preference. I just want to make sure that it's fair and reasonable. Like, so I have some companies I have preferred shares, right? Some companies I have convertible debt. Some cases I've provided companies with loans, right? With favorable, with very nice interest payments that are generating a nice return. So, and then in other times I've joined into limited partnerships, you know, with some of the larger VCs that build out these things, like BrightSparks would be an example. All the investments I've made in BrightSpark would be through a limited partnership. So limited partnerships, preferred shares, convertible debt, convertible notes, and loans. So I do them all, right? And they're all different, and they all have their pluses and minuses, but depends on the situation. Sometimes different situations call for different, I guess, structures.
But it seems that you're pretty flexible, so there's not you're not interested if it's a safe, or as long as you like the company, you're going to work within their terms and figure out what's the best value for yourself and your investment.
100%.
That's great. The other side of this goes to board seats. As you're making these investments, have you taken a board seat? Do you choose to take board seats depending on your investment size or the amount? Is that something that's that you look for as well?
Yeah, so that's something that I'm extremely interested in. It's an area where I feel I can contribute and create value. And I have, right now I'm on the advisory board of 2 companies. And, you know, I like listening. I like getting an understanding in terms of where they are and what roadblocks are in front of them, and looking for ways and help them think different and to think different and to crack the code and what to watch out for. I love, like, my business card says connect, collaborate, and create. I love connecting with the business owners. I like collaborating with them, and I love helping them create new opportunities. And I think my background, especially from my corporate life, when I was looking at, you know, thousands of business cases inside the company, I think that positions me well to be able to really add value and contribute and make a difference in an advisory board type position. So I'm doing that. I like to do more of that. There's a guy that I follow, Keith Cunningham. I love that guy. And he's like tough love, and he talks about the role of the board is really to watch for dangers, right? And ask the difficult questions and watch for dangers and anticipate what could blow up, and make sure that you've got contingency in place so that you can manage unforeseen challenges. The other thing that I've learned in my past life that I think I could bring to a board position is I've understood the importance of focus. Focus. You've got to have a target. You got to have a clear, defined plan to achieve that target. You have to have KPIs that you're going to measure and track to make sure that you're getting there. If you don't know where you are and you don't know where you're going, you're not clear in terms of how you're going to get there. Like, you see companies sometimes that are in those positions. So you have to be crystal clear. You have to be honest about where you are, and you have to be clear about where you're going. And you need to have a defined path and a team and the resources that are going to help you get there. And those are all the things conversations that I can have with companies that I think benefit them, and the discipline that I think is required for a company to be successful. And I think that's the role of the board.
Well, you touched on a lot of points there, and you really steered it to all of these other elements that you help see and envision while you're on that board seat. And I think that is really conducive to, as you mentioned, your background, by being able to work with a lot of different companies and a lot of different plans or projects that allow you to kind of see, is this going to have a good result? Is there a KPI that's going to make sure that this makes money, so that you can bring that back to that startup? And I really, I love the three things: that connect, collaborate, and create. I think those are really great terms that help a focus get into an entrepreneur's mind. And when you're starting to work with them, deciding how, right now this is where we're at, but we got to get somewhere, and we all have to work towards something. And I think a lot of the time, startups don't always think that they've got to be somewhere. They're just hustling and bustling around, and they don't think that if I set a target or I don't set somewhere to go, I'm just going to get there. And those little targets turn into big targets, and they become very much accomplished when the team can get behind them and they can all believe in the direction that they're going. So being able to bring that to a board seat, but also looking for that in the CEO is really an amazing feat to have. And I love the crack the code. I think that's key to any startup, is helping them understand how they can crack that code.
Mm-hmm.
So you've talked about a lot of different things that you kind of help bring to the startup. Is there any communications that you like, or ways that you want the companies to be able to help you stay in tune? So that outside of a board seat, is there other things that you're looking for to make sure that you can help when it's needed or before it's even needed? Yeah.
So what do I see in the way companies communicate? So I'll tell you, JP, that was my number one early dissatisfaction as an angel investor. Number one, I almost decided not to continue as an angel, because I thought, this is like goofy. Like, you're writing checks, you're giving all these people money, that I earned, and then they go dark and you have no clue what's happening. I would say the majority of the startup companies are lousy communicators. And it's, I think it's an easy, I've had conversations with all my angel buddies and with Malcolm and the people at Spark Angels. And I said, we have to, there should be an expectation that there's going to be some communication that comes back to you. So it doesn't have to be onerous. It needs to be like, it's just a simple, like a KPI, the same kind of like KPIs that they report on every quarter. Once a quarter would be fine. Could be a nice little one pager, and said, and it can be a nice standard thing. I've even drawn one out. Like, what are you aiming to achieve in the next 90 days? What are the challenges that you see in front of you for the next 90 days? What are the resources, or what help do you need to achieve those goals? Right? And then if you just had a nice simple thing that was repeatable, and it was every 90 days, and you sat down, don't think it's too much to ask the founder to sit down for a half an hour, a quarter, and just update their 90-day vision. So what did I achieve over the last 90 days? What went well? What didn't go well? What am I set out to achieve for the next 90 days? And then in terms of the communications and partnership, really, that I believe is important between the entrepreneurs and their investors, is that I don't think that the companies ask for help as often as they should or they could. I don't even know if they realize the resource that's behind them in that room. And it doesn't even have to be investors. So let me give you an example that if we have 30 angels at York, or at the Spark Angel Group, we've got 30 angels that are there, and 6 of us invested in a company. The other 24 guys would be more than happy. People love helping people. And the other 24 guys, even if they didn't invest in that last round or something like that, if somebody needs somebody who knows something about logistics, or if somebody needs somebody who knows something about getting a part manufactured in China, or if somebody needs to know how do you get your product on a shelf at a hardware store, like people, if somebody needs somebody who knows how to get, maybe it's a legal thing, right? Like, how do I protect myself? How do I get some protection on my idea? Everybody wants to help. You know, they're dying to help. They love help, and it feels good to help. And the business, so communications, they should have a 90-day plan. They should have a 90-day KPIs. They should tell us what happened in the last 90 days. They should tell us what's happening in the next 90 days. You know, how full is the funnel, blah, blah, blah. And they should say, I need help. These are the three places this is what I want to do for the next 90 days. These are the three areas I could use some help. Be more than happy to have a conversation with anybody who thinks that they could pitch in. That's a long-winded answer to your question. It's crystal clear to me. You can see from my voice that I find I'm massively frustrated because there's a huge, you don't have to go it alone. There's so much support and it's free.
Yeah, it's a very tough space when it comes to communication. And I think if you look back at where it all starts with the company going and looking for funding, this is all new to them. And then this part of communicating back to share what's going on in the business, I think that also becomes quite new to them. So nobody wants to share fails or things that are upsetting or things that don't work well. So I think it kind of goes back to what you were talking about before, was the type of entrepreneur that you get to invest in or the one that you're working with. I think that rapport plays a big part in helping them better understand that here's how we need to be able to communicate, because if you do, we're going to catch a lot of this stuff beforehand. And as you mentioned, you're on a couple boards, but you can't be on every investment boards. So you're able to only help the ones that you're really deep in and helping. But then there's all the other ones that don't get that same intrinsic value because you're not in the inside loop, if you will. So how do you get them to still look at it the same way and say, how do I get my problems out so that people can help answer? How do I use the room of all these people more frequently?
Right.
I think that's just a mind shift. It really is a tough one. And you're right. It's not the first time angels have said, you know what, no one wants to tell me what's going on. And then I find out at the very end, and that's terrible because then I couldn't help them.
I could have helped them. When I was younger, I was taking flying lessons, and my instructor told me one thing that stuck with me, and I can apply it all over my life. And he said, what do you call, so we're sitting on the runway, Toronto Island, over at Toronto Island Airport, we're sitting on the runway, and he said, what do you call the runway behind you? I didn't know what he's talking about. He said, you call it useless, right? And whether it's a takeoff or a landing, it's useless. You can't make use of it, right?
Yep.
And that's the same thing with what we're talking about here. It's what can you do? You find out 3 months later that the guy was struggling with something that you could have helped with, right? When people ask, and this was my only thing with my team members when I was a leader, I told my team members, the only time I'm ever going to get mad at you is if you don't ask for help early enough. And asking for help is a strength, it's not a weakness. Asking for help is a strength. And we need the entrepreneurs to ask for help more than they do today. And they have to ask for help earlier than they do today.
No, that's great. And you're right. Asking for help is a strength. I love that. I'm going to use that line. I think that's hits it home right there in the whole discussion from there. I think just because we're kind of getting close to wrapping things up, so I'm going to ask two kind of final questions for you. Or maybe three, because I really want to know, has there been, based on the COVID side of things, have you shifted your investments, or are you continuing to move forward just as is? Nothing's really slowing you down, you're looking for great deals, or how has that shifted in the last 3 months?
I think for all investors, and myself included, it's changed things a lot. I think the brakes have gone on, and you know, I have personal experience right now. I'm trying to help a company raise a couple $1 million. You know, and we were within like a couple $100,000 of our goal, and it's brutal. It's impossible. We can't get it, and no one is willing to. You know, people that I know that would be able to write that check in 2 seconds before with just a simple conversation, everybody's sitting on their wallet. No, I'm just going to wait it out. I'm not quite sure right now. I'm just going to, you know, take a bit of a pause. I see. So it feels like the environment has changed. It's not an easy environment to raise funds in right now. Me personally, I'm probably more inclined to help the companies that I'm already invested in over the next hump versus jumping into something completely brand new and unknown to me. So I think it's, yeah, the environment has changed, and I think it's difficult. It's a difficult environment to raise money. Obviously, if something just showed up in front of me and I thought it was, you know, it met all my criteria,
Yep.
and that really I felt engaged and inspired by it, I would do it. I would never say never, right? But I would say that the environment is tough right now for raising funds.
No, and duly noted. It is. It really has shifted a lot, and it's still looking for opportunities and great opportunities, and then from there deciding if it's going to be a good one or you're going to have to wait it out a little while. And things have shifted a lot. You can see it everywhere. So, but that's good to know. So, the last two questions I have, and this one's always an interesting one. In all of the time that you've been working with startups and you've been investing in startups and everything that you've kind of learned in the last 40 years of working in big business, is there one or two things that you see from the exits you've had and the companies you're working with that really stand out as being exceptional pieces that other entrepreneurs can say, you know what, I really need to have this skill, or I really need to have this that's going to make my business successful? Is there something that you can pinpoint on that really changes things around? Like you've named a lot of things from tenacity and agility and being able to maneuver and being passionate. So those are some skills, but is there something that really stands out around a success to be successful as an entrepreneur?
Well, you know, again, right away, you have to have a great idea. You have to be solving a real problem. Like, it's not, if you're going to go into a space, you're not going to go in there with an idea that's going to be 2 times better than what anybody else has got out there. You want to go in there with something that's going to be 10 times better than what somebody's got out there. It has to be materially different and better. You have to create space. You have to create space between you and the competition. And the way you do that, there's two ways you do that. One is that you have an idea that's 10 times better, 10 times faster, 10 times simpler, 10 times more meaningful, 10 times whatever. And then you differentiate yourself in such a way that you got a massive moat around you, where it's not an easy thing for somebody to copy or follow. That's even more powerful than having IP protection. Like, who cares about all the legal blah, blah, blah? My one friend told me, I win in the marketplace, not in the courts, right? You win in the marketplace by having a product or a service that's 10 times better than anybody else's. Catch me if you can, right? So they have to have that, and they have to build great teams. They have to build great teams, and hire the best, and they have to be focused and all those things that I talked about, right? You got to be focused. You got to track like small wins. You got to establish, track, and celebrate small wins. It's a series of small wins that gets you to the finish line. And so some of the exits that I've seen, and it obviously, back to my other favorite, it's got to be massively scalable, right? So like I invested in this company. I saw right away the guy had a cool thing. I knew exactly what he was trying to do. It didn't exist. Nobody was doing it. It was cloud computing. In the cloud computing space, the company was called HTBase, and he got bought out by Juniper Networks. Boom! Within a year and a half of investing in this company, because the guy had the secret sauce. He thought of something. He saw an opportunity that nobody else had noticed, and he was first to market. He was first there with a solution that worked, and it was brilliant. We talked about EG. How those guys sort of like snuck up on a growing theme and are making the most of it. I don't know if I answered your question, but
yeah, no, you totally did, and you worked in a few different spots to it, but you're right that it really does come down to that driver of the CEO, the scalability, the idea of being able to find something that unique and sets them aside, creates a moat around them. So 100%, those are all great pieces.
if I can add on just for a second, JP, that
Yeah,
the one conversation that I've had with a couple of the founders is I say that I want you to be passionate about what you're doing and I want you to love what you're doing, but I don't want you to fall in love with it. Because if you fall, you know what I mean? It's like there has to be an exit.
Yep.
It's kind of the company reaches a level of maturity where it's better in somebody else's hands than staying in your hands.
Agreed.
So that's
The judgment becomes clouded sometimes. I find that when I first started investing myself, I looked at different angles on the way the startup was, and the people that came in it to make money and sell it versus the people that were solving a problem that they faced. The people that were solving the problem that they faced had a harder time seeing the real problem in a bigger picture and a scalable problem. It became a passion, love project, and it was hard for them to let go of something because it meant so much to them. Whereas the person that found the problem, solving the problem, but was in it because they were seeing the end of the rainbow, if you will, they tended to not be as connected to it, but were so passionate about knowing the field, knowing the understanding, the logic, understanding the sales cycles, understanding how to close people. They were really driven to get in there. So it kind of started to take me back from, I'm solving this problem because I lived through this versus I'm solving this problem because I see this happening to everybody and it's something that I want to tackle and fix. And there is a big difference between the two.
The role of a CEO changes over time as a company matures. At the beginning, you're a jack of all trades, right? You're the accountant, the sales guy, the marketing guy, the coder, the software coder. Then you become more of a manager, then you become more of a leader, then you're actually overseeing the company, you're leading the company. So the role of the CEO changes over time. And some people can make that transition and some people can't, right? Some people don't know how to let go. So that's important.
Agreed.
The company is going to make it out the other end and become bigger than the vision that they had in the first place.
Yeah, you got to figure out if you're good at starting something and you can find the right person to come in and be the growth, and then somebody to come in to be the accelerator. And then if you come back and clean things up, there's always different ways that you can fit into a business. But a lot of CEOs start to look at themselves as just being that starter facility inside that business. So those are great points. There are been posted a couple of questions, but because of timing, I want to ask one last question, and it's kind of pull out your crystal ball time. And where do you see and look at the market where we are right now in the next 12 months? Where do you see it going? Any areas of real focus that you think are going to pop out? And then where do you see us in 3 years?
Yeah. So so what do I see over the next 3 years, and what do I see the market looking like for
in the short term and long term? Yeah. Where do you see it going? Is there a main focus? Vertical?
I think for founders and startups, I think you need to step back and reflect, because this COVID's been a bit of a punch in the face, and it's shaken things up. And I don't think a return to normal is what we're going to see. I don't think things are always going to be a little bit different, and I'm hoping different in a better way. I'm not saying in a negative way. I'm thinking in a positive way. But I think COVID has exposed opportunities and needs that if an entrepreneur can discover and leverage, there's some great opportunity. A lot, when you look back 3 years, JP, when you look back 3 years and you say, like, what did the world look like 3 years ago? And it looks, and what as compared to what does it look like today? Today it looks way different than it did 3 years ago. But I think this COVID has accelerated everything. And in terms of things that were already changing, I think maybe that things that would have maybe changed over 3 years are maybe changing now in 3 months. Adoption of technology, that might have taken somebody 3 years to get comfortable with, all of a sudden they had to do it in a week, right? My wife's company that was always on the back burner projects have come to the front burner. through COVID. And all of a sudden in there, you find some gems, some surprises, some things that maybe, wow, you know, I was always saying one day I was going to get to this, but now this is the time to do it. And so I don't have the answers in terms of what, like, I'm not going to tell you, like, I don't know, I'm only going to invest in biotech, or I'm only going to invest in, I don't know. But I want to, like, it's a new world order. And the new world order is it presenting new opportunities and new challenges, new problems. And I think for the people that get on that real quick and find a way to create value in a meaningful, material way are the guys that are going to win. People that can free you up, the people that, so that's my answer.
No, I like it. You know what? It's going to be a quick change. It's going to be a tough change. But the difference is, as you mentioned, people are adapting so much faster now. So if you've got something out there that solves a problem, if it's in biotech, if it's in future tech, it's in whatever domain that you think is going to fit. If people can adjust to be able to live through the COVID, they should be able to live through any sort of new change that's going to come in tech. And I think that that's really what is happening. People are adjusting quickly to the new norm. People are pivoting in their everyday jobs. Entrepreneurs are pivoting. Families are pivoting. Education's pivoting. Everybody's trying to find a way to fit. And if you don't find a way to fit, you're not going to survive. And I think that that's what I'm kind of getting out of what you're saying, is that you've got to fit to move on. So if you can't find it, you're going to struggle. So figure out where that is and move it, and you'll find yourself in a good spot in 3 years.
Exactly. And it's been really inspiring to see the companies that have been able to already pivot and adapt and kind of refocus and make a go of it, right? And through COVID, like some companies are growing like wildfire. Some got really creative and did a quick pivot. Some people are just using the time to think and regroup, and some people are, you know, not as fortunate.
For sure. And that just takes time and some great experience for some great people to kind of help you. So I think from today, Bruce, I want to thank you very much for all of your insights. I got lots of notes, so I'm a big fan of everything you're doing. So thank you very much for joining us today. We're going to cut this up into little bits and send it out. So we'll do that over the next a few weeks, and we'll keep you posted on that. But I think there was a lot of great things that I'm happy to share with everybody. A lot of great insights. And I think as a founder of a company that's trying to grow and figure out if they can look for funding, if they keep their focus, they find the right market fit, and they look at scaling and they build the right team, I think they got to be reaching out to you, because they're going to be knocking off a few of the things that you're looking for. And being innovative obviously is going to fit inside of that. So outside of it, inside of it, I appreciate all your time. Thank you very much. And we will put a pause on it, and maybe we'll come back and look at your crystal ball in a couple of years when we do a follow-up interview.
Good show, JP. Love what you're doing.
All right. Thanks a lot.
Have a great day.